My name is Sharon Sarai and I work for Thornfields, part of a larger group with Stericycle. I'm the training delivery manager for Thornfields, and I also look after the ILM centre part of the business. So, as you know, Thornfields is part of the FPM group, and I'm confident some of you will know that brand fairly well. We've had some really successful sessions with Phil Harnby. Phil, do you want to just give a little wave? And it's exciting to be here again today on our 6th session. Phil looks after many practices up and down the country, and I know he particularly likes this sort of interaction and engagement with practice managers and practices. This short time today is all about giving you guys something back, and it's good to have a professional with us that can share that knowledge and that expertise. You've done a great job through COVID, and you're still doing a great job after COVID, if there is such a word as after when we mention the word COVID. It seems to be going on, doesn't it, for a long time. There's just some housekeeping. This session is being recorded. If you've got any questions, feel free to add them to the chat facility. And if we don't get through them all today, we'll come back to you with a follow-up guide and also a link to a recording. I know we're on mute for the most, I think, which is good. The presentation will last approximately 20 minutes, and we can then have a question and answer session. So it's over to you, Phil.
Thank you very much. Much appreciated. I just want to start by apologising. There's builders in the building next door, so if you hear banging or drilling, it's not us. It's our neighbours. So yeah, as Sharon very kindly introduced me there, my name is Phil Harnby. I'm a chartered accountant and I've looked after GPs for quite some time. And yes, scarily, this is now the 6th session that we've done. Just a quick disclaimer from ourselves. As a firm of accountants, we give advice kind of generically. Tax is very specifically individuals, so unless you're going to pay us specifically for that advice, just to disregard everything you're about to hear. So a bit of background about ourselves. We've been around since 1973. We're based up in the northeast, but as Sharon said at the outset there, we do have clients across the breadth and the depth of the UK, and we've always specialised in the healthcare sector. So I've looked after GPs now for well over 10 years, and as a practice, we've always looked after dentists, care homes, children's nurseries, and as I said, kind of specialised in the GP sector for some time now. So this afternoon we're here to kind of talk about personal expenses and tax, and the two are fairly intrinsically linked, and it's possibly more beneficial for partners in practices, but I think certainly if you're any of my GP practice managers, you will get asked time and time again, what's this expenses, how's this tax stuff work? So a bit of a pointer, and of course, as we said, this is being recorded and will be available at a later date. So if you want to just send them the link to the course and say, look, spend 20 minutes, you might learn something, feel free to do so. So the important thing to remember with GP partners is they are self-employed for tax purposes. They might be part of a partnership and there is a partnership tax return, but for tax purposes, the revenue see you as being self-employed, and the same rules apply for GP practices as they do for any other self-employed individual, no matter what their trade is. And self-employment comes with two taxes. And in fairness, everybody in the UK, I'm saying everybody, but the majority of people in the UK pay two forms of tax. And we use the word tax probably a little bit as a coverall as opposed to what's really going on behind it. So the first area of monies paid to the revenue, let's call it, is income tax, and employees pay that as well as self-employed as well as partners, and it's tiered across the range of incomes. If you're only earning less than £12,570, you'll pay no tax. Above that level, at 20% up to just over £50,000, over 50,000 to £150,000, you're going to pay 40%, and above £150,000, you're going to pay 45%. So when we start to look at the expenses that we can claim in a couple of slides' time, actually, if you're a partner who is fortunate enough to be earning over £150,000, the expenses that you can claim are almost going to save you half. So if you spent £100 on something that's allowable, and we'll talk about what we mean by allowable shortly, half of that you're going to save in tax. So it's really, really important to keep a good track of your expenses and ensure that you've got that record keeping right, because it can be a lot of money. And we talk a lot to our clients about, we're certainly not talking about fabricating expenses and making things up, or more, we have a lot of clients that are driven entirely by saving tax. And actually, in reality, it's more about saving the money that you've already spent. So if you've already spent £100 on something, you might as well get the tax relief, because if you spent it, you've spent it. There isn't a lot of sense in spending money to save tax, because tax is always just a percentage of the bigger number, but keeping those records appropriately and in whatever methodology that works for you, and that could be, a paper type wallet folder, or it could be an app on your phone, or it could be an Excel document, but keeping that is really important. The second element of monies that is paid across is national insurance. So again, employees and the self-employed all pay national insurance. I'll remember not the Prime Minister who's just about to leave office, but the Prime Minister before that left office because of national insurance and the claims that we weren't going to raise taxes, but we can raise national insurance. So it's not a tax, it is a national insurance, and it's supposed to pay for our healthcare and NHS and things like that. But it is chargeable on our profits, on the same profits we charge for tax. And effectively, there's two elements of self-employed national insurances. Employees pay a different type of national insurance. They pay a class 1. The self-employed pay class 2, which is fixed no matter how much you earn, although there is exemptions if you're below certain levels, at £3.15 a week. And then class 4, which is at 10.25% on profits above just under £12,000. And then once we go above that £50,000, we're on 3.25%. So the taxes together can be quite punitive. And as I said, I'm using taxes in the global sense of income tax as well as national insurance. But it's important not to forget, because 10.25% is still quite a lot of money, and 3.25% is still a lot. So if we're thinking, oh well, it's okay, my tax is only 45%, it is, but there is also national insurance as well, which can bump those levels up. What is really critical to kind of point out at this point is that we're in the midst of changing Prime Ministers, and what I'm telling you is correct today. It may not be in a couple of weeks' time, depending on who ends up at number 10, but we can only work on what we've got at today's date. So as I mentioned before, keeping kind of records of personal expenses is really important, and we as a practice, and I know a lot of other accountants do similar things, so you may have a similar type of document for your own accountants, but we produce a little booklet every year which is designed to be a bit of an aid memoir to try and remember, encourage you to look at kind of what expenses you've incurred. And we'll look over the next couple of slides the type of things that we'd expect to see and how they would work. But again, it's down to that record keeping. If you're not keeping good records of what you're doing, it's impossible to save tax. Whereas I said before, if you've already spent that £100, we might as well have that tax relief that comes with that. So one of the key elements which most, if not every single GP partner will have is subscriptions to some kind of bodies. You'll certainly, if you're a GP, be a member of the GMC, and those are an allowable expense. So things like our GMC, if you remember the BMA, RCGP, if you've got some indemnity through the MDU, these kinds of membership bodies are all absolutely allowable and can be deducted for tax purposes. You're part of them because of your trade and the work that you are carrying out. So again, ensuring that you're aware of what you're a member of, because again, although we're looking potentially at tax relief, it's also important to reassure ourselves as to, well, why am I a member of all of these things? I'm a member of 20 different organisations. What benefit do I get? Is there crossover in benefits from being members of particular bodies? If we don't need to spend that £100 in the first place, that's more efficient than just saving the tax relief on the back of that £100. Things like our use of home and telephone and internet are also allowable expenses, and I get asked time and time again about kind of the use of home and how much can we claim and what can I do, and hey, during COVID I was pretty much working from home permanently. I've had all of these additional costs. Well, to kind of give a balance of reasoning, the revenue over COVID became very friendly towards use of home and said, hey, we appreciate everyone's now working from home. We appreciate you're all now going to have costs of living from home. We're going to double the allowance that we're going to give you to deduct from your profits, or to deduct from your employment if you're an employee who's working from home. And they were very especially generous in that, is that to prevent you from having to work out anything particularly complicated, you just actually had to work one day from home during any given tax year and you could claim that deduction. And I've seen lots of things on Facebook recently and kind of marketing type stuff of firms saying, oh, you know, we can get you all of this tax relief by saying you're working from home. The limit was risen to £312. So it's not exactly world changing, but it's better in your favour than the revenue. So again, you know, if you've done any work from home, that is an allowable deduction. Now, it's definitely worth having conversations with your advisors about, well, how much could I claim? And bearing in mind the revenues limit is that 312. If we go significantly north of that, the revenue can challenge us in other ways. So we do have to be careful about what we're putting down as a claim for use of home. And if we're trying to say, well, actually £10,000 of my costs of living at home are to do with the work, the revenue can certainly come back and question that. And there's a lot of what the revenue calls a wholly and exclusively, and we'll come on to that shortly, around kind of claiming. But things like your telephone, if you're having to make calls on that, if you're having to make speaking to the surgery speaking to you, you're having to ring patients and things like that, there is an element of your telephone bills, of your costs of having that phone, that proportionately you're using for business purposes. And the same with any kind of internet package. Now, we're not talking about, you know, TV, telephone, everything else that kind of comes with that. We're looking at the tools that you're needing to use your trade, but again, being sensible around that and looking at a proportion of that is definitely sensible to do. There's also things like courses and conferences, and if we're going to go on a course, if we're going to go on a conference, if we've had to buy some medical journals, some books, we've subscribed to a regular journal that we're paying for, even kind of electronic type versions of these. They are again tools for your trade. They are things that you are doing for the purposes of work, and therefore are allowable. And that you know, again, is worth looking at and seeing, well, what am I actually a member of? Because you join a magazine type subscription and 5 years later you've forgotten you're paying for it. Again, kind of looking through that, you know, am I paying these things for reasonable reasons? Am I doing it for is there some benefit that I'm seeing out of being part of that? It is definitely worth again, you know, that £100 is more than the tax that you're going to save. But if you are spraying that, there is value in that, then absolutely we should be looking at the relief that it gets. And any courses that we've been on, so if we've been on an update course, if we've been on anything like that, what's important to remember with things like courses is that the revenue don't accept new qualifications. So a course to do a new skill rather than keeping a skill up to date. Now, there is some really good stuff on the BMA website with regards to exam courses and exam qualifications at the end of training for some medical students and new doctors, and if you are in those circumstances, then it definitely is worth getting advice around that, because there's some stipulations around if you have to do those qualifications to keep your job, then it can be allowable, where for most individuals it is just update type courses. So if you're going to go on a new course and learn to be a lorry driver, as a good example, and I might be using that as a flippant example, but I have had a GP ask me this question, then no, that doesn't qualify for as an expense against your GP earnings. But once you are qualified as a lorry driver, you then go and earn some money as a lorry driver, then any update courses you have to do for that kind of work, again, would be allowable against that income. So they've got to be relevant courses, they've got to be keeping your skills up to date, but again, they're absolutely fine, and the same with conferences. And I think we have started to see, as kind of the picture there shows, we have started to see, thankfully, those types of events now re-happening, and you are able to attend them rather than being Zoom sessions at a distance. And of course, equipment. So if you're having to buy a new stethoscope or a doctor's bag, those again, you are purchasing them for the purposes of your trade. And there could also be other things that you've had to buy as well for your own premises. Because remember, we're talking about personal expenses. These are things that have been paid for by you personally, not paid for, reimbursed by the practice or by somebody else. So you may have had to, over the COVID period, bought a filing cabinet. You might have had to have taken bits and pieces home. You don't necessarily want that left out on the kitchen worktop or anything like that. So you bought a cabinet to lock it away and before you go back into the surgery the following day or the following week. Again, those expenses have been incurred because of the trade, because of the work that you're doing, and therefore they are allowable for tax purposes for you as individuals. Now, I've left kind of the best to last, because I certainly get asked about motor vehicles significantly more than anything else. And there's kind of two options when it comes to motor vehicles and claiming expenses. There's 45 pence per mile, which is the government allowable rate. So that is the allowable rate that you can claim in reduction in profits again against motoring. That is a case of keeping a log of the mileage that you've done. Yeah. Now, it's been 45 pence per mile as long as I can remember. I cannot recall a point where it was a different number to 45 pence. It does drop down if you do more than 10,000 miles, but I'm not aware of any GP that for business purposes does more than 10,000 miles. It's normally significantly less than that. But that number has been the same. And if you know, we're talking even back when fuel was 80p or less a litre, compared to the point we're at now, where we're just south of £2 a litre, it has still been that. And that is designed to cover all expenses of your vehicle. So the wear and tear, the fuel, insurances, road tax, etc., etc., etc. The other option is actually looking at the costs of running the vehicle. And we'll cover those in a moment. But you can only change the methodology when you change the vehicle, or when you join or leave a partnership, or start or end self-employment. And the choice you have is whichever's better for you. So you can do some maths and well, actually, yeah, 45p is better, or actually the costs of running the vehicle are better. It's entirely your choice. When it comes to running the vehicle, and I suppose one caveat with that is 45p a mile, you only need to record one thing, and that's the number of miles. So admin wise, it's significantly less burdensome. The costs of running the vehicle are exactly that. It's the costs of running that vehicle. So keeping a record of your insurance costs, your fuel, your servicing, your tyres, repairs, maintenance, that kind of thing, along with an element of the cost of that vehicle. Now, the cost of the vehicle is very complicated in how it's worked. It works through something called capital allowances, and it also links into the energy efficiency, or more accurately, the CO2 efficiency of the vehicle. So the lower the CO2s or the less CO2s that you have, the faster the tax relief that you get on that vehicle. So if you were comparing kind of an electric vehicle against a great big 4x4, the electric vehicle would give you allowances faster than the 4x4 vehicle would. But of course, you've got to keep those records. You've got to keep a list of all of the costs that you've incurred. Now, I have had clients in the past that have gone and got a specific credit card. So everything to do with my personal expenses has gone through that credit card. So it's a case of printing off 12 statements or sending across 12 statements off the credit card. Everything's in one place. We're not finding fuel receipts in the glove box, in a purse or wallet, on the dresser at home, through the washing machine, etc. Because again, if you're spending that money, you need the record that you've spent that and some backup to it. And when we're thinking about records, just the same as when we've got records in a practice, you've got to keep them for a specified amount of time, which is effectively 7 years. So even if you're doing these expenses, you are claiming them against tax, you still have a requirement to keep those records for a period of time. So again, as I said before, kind of having some kind of a folder or wallet, even taking photographs on your phone, some methodology of keeping them is important. But what I tell a lot of clients is, if you, certainly when it comes to motor vehicle types expenses, if you are looking to change vehicle, have that conversation with your accountant, or alternatively give ourselves a call either. So there's also anything else. So I've kind of highlighted the more relevant or the more likely things that come out, but you may, or your partners may, be spending money on other things that are perfectly allowable for tax purposes. And the revenue work on this wholly and exclusively principle, which the way that I explain it to people, and I think is probably an easy way to understand it, is that if you've only spent it because you're in business, then that's allowable. So if you've had to spend something because you're in a business, and then that's a cost of that business, then it's perfectly fine. And you know, certainly worth having that conversation with somebody like ourselves about, well, actually, is it deductible? Can we have it? What would I need to do differently? Is there another way of thinking or looking at this? So the other element that kind of comes hand in hand with our personal expenses is private income as well. So again, we've got expenses that we've been incurring outside of the practice, so we're incurring them personally, and then we also might be earning income as part of that as well. And that's effectively any other income that you've been earning along the same trade as your partnership, GP partnership income. So if you've been doing, I've got a copy of a Locum form there, if you've been doing some Locum work, or you've been doing some medical reports, or you're doing anything that links back to doctoring, to GP partner income, then it should be reported on the partnership tax return. Because from the revenues point of view, you're only self-employed once in a particular type of trade. So as I mentioned before, if you became a lorry driver, then absolutely that is a separate trade. That would have a separate list of expenses that would go against being a lorry driver. But if you are a doctor, a GP partner, and you're doing other work that is linked back to that, it all forms part of one set of numbers on your personal tax return. And that flows from the partnership tax return. So hence why, if we do have any private income that kind of links back to that, it will most likely end up on the partnership tax return and form part of that. So again, it's worth thinking about and having those conversations about, well, what is that income? How does it work? What the impacts of that are as well. As we've moved into this kind of new-ish place where everyone is more balanced, I think, with the work-life balance following COVID, or trying to be at least, then actually, you know, if I'm losing 45% of that private income potentially along with national insurance, where is that work-life balance and how does that work? So that's certainly a conversation we're having more and more with clients at the moment, who are trying desperately to get to that balance. And of course, we would always recommend, you know, you use something like Thornfields and their vast list of knowledge base information that sits on their websites, as well as kind of speaking to a specialist like ourselves, who kind of understands what's going on. You know, we understand what GMC membership is and what it means. If you've got the random firm that maybe just has yourselves as a client, or very few GP practices that may just not understand the terminology, and that can often add to the complexities of trying to work through these things and not necessarily ask the question that needs to be asked. So for obvious reasons, we'd always recommend that. And I can see one individual's got their hand up, but if anyone has any questions, if you drop it into the chat, I'll try and answer them now. There was a couple of questions that came in prior to this morning, and I think I've covered a couple of them up, but the bits that I didn't was that Someone's asked about clothing and whether or not clothing is an allowable expense. Revenue's got some really specific rules around clothing. PPE, so personal protective equipment, which I think has become, I think it was one of the top words, wasn't it, in the last couple of years, new to most people, is allowable. So if there's a prevention from potential injury or risk to individuals, that is absolutely allowable. So if you've had to buy some safety boots or some face masks or scrubs or things like that, those are absolutely allowable for tax purposes, as long as they're also not getting reimbursed by the practice. It's different if you've gone and bought, 50 face masks from Screwfix or something like that during the pandemic and the practice has given you the money back, then that wouldn't go on your personal expenses. But if you've had to buy some PPE yourself personally, then that is absolutely fine. The other thing that the revenue are generally okay on is things like uniform. But uniform has to be badged up and branded. It can't just be, a shirt and tie. It's got to be a uniform in those regards, and that kind of leads into shoes and footwear and things like that as well. That you'd have to be PPE footwear. So if you're wearing scrubs and Crocs, the Crocs aren't wholly and exclusively. So there's to be a bit more of a discussion around that type of footwear. Someone's also asked about their lunch as well. So lunch is an allowable expense if you're away from your usual place of work. So if you're just in your usual place of work and working from home doesn't count as an unusual place of work. If you just happen to be working from home one day, so you can't then nip out to McDonald's and get a takeaway. But if you are not at your usual place of work, so if you've gone to a conference or a course or something like that that's taking you away from your usual place, then yes, lunch is allowed and is allowable. There are limits on that, so you can't go and have a 5-course meal and claim that back against tax. There are limits as to what can be claimed, but that's absolutely fine. And the last question that we got asked around this kind of topic was around life insurances. It's a fairly complex area, life insurances, and it depends upon the type of policy and how that policy is being paid, and it will often be in the T's and C's of that policy as to how it's being treated. A lot of policies that are kind of covering the individual generally aren't allowable for tax purposes because if any payout on them was made, it's not taxable income. So you can't kind of have a win at both ends of that discussion. There are some policies that effectively pay out a profit share, and they can potentially be tax deductible because the profit that you get then paid out on a claim is then taxable income. But again, it depends on the policies that they fall within. The general rule is then that they're not. That's the general point, certainly for self-employed individuals. Different for employees. So if you've got kind of a relevant life type plan, they can be absolutely allowable because it's the employer that is paying those costs. As a self-employed person, you don't have an employer, so it's difficult for that to be included. So we have had a couple of questions that have come through here, and it looks like they're both around vehicles, which kind of ties into what I experience. So how do we keep records when you have an electric car? So in very much the same way that you would for a petrol vehicle. The challenge you've often got with electric cars, and hey, I drive one myself, so I'm aware of these challenges, is how much electric have you used? It's very, very difficult. With fuel receipts, it's very easy. You go over, you fill up your tank of fuel, you have a receipt, and it tells you you've just spent £99 on diesel. It's not so easy with electric. So having an ability to record what electric your vehicle is using, and then being able to tie that back to your electric bills would really be the only way that you could do that. Now, it depends on the electric vehicle that you have. Mine will actually tell you how much charge it's taken in each night, so you can get a report of it to say, well, actually it had 50 kilowatt hours last night, or 25 kilowatt hour, or whatever the proportion of electric is, and from that you could work backwards. You might end up down the route of 45 pence per mile potentially for record keeping purposes, but again, it's worth doing that exercise. And what we generally tend to say to people is that, look, let's have a look at a month. find a representative month, what works best, and let's work out from there. So if it definitely works out better actually claiming that 45p per mile, let's just go down that route. If it works out better looking at the costs of the vehicle and potentially the electric vehicle it would, then let's actually work out what that benefit would be and how we can accurately come up with a set of figures that would be usable. Yeah. So our next question, I'm assuming that vehicle expenses have to be proportionate to the business mileage being driven each year. They do, yes, you're quite right there. You're quite, I didn't point that out. They are proportionate between the two. So again, total mileage. So again, what we tend to stress people is service to service, which will give you an idea. And then what proportion of that is business mileage. So again, looking at, you know, home visits, things like that, that are business journeys. Because we always got to remember the journey from home to work, to the office, isn't a business journey. The revenues view, which is probably quite right, is that you've chosen where you're going to live, you've chosen where you're going to work. That journey isn't a business journey. But home visits, trips to courses and conferences, meetings, those kinds of things are all definitely work journeys and can count towards that. And what you generally find is that the closer you live to the surgery, the bigger your claim can be. So if you're ever sat kind of looking at, well, hang on a second, my partner sat next to me, their motor vehicle claim is twice mine, it's probably because they live closer to the surgery, and that proportion calculation works in their favour. So we've also got a question here about, so what about locum illness insurance to cover long-term sickness of individuals? Is this claimable? It depends who it's covering and how it's covering it. So if it's covering the practice as a whole, generally it is claimable. If it's covering a specific individual, then potentially it's not. So a lot of locum illness type cover is to cover the costs of having the additional locums in. So it's not to be paid out to an individual, it's to pay out to the practice to enable them to put more locums in place. Then that generally is an allowable expense for tax purposes, yes. And we do have one more question that came in prior to this that isn't necessarily linked to tax and personal expenses, but it's about thinking about the NHS Pension Scheme and some queries around that. It is absolutely crucial that you take some independent advice when it comes to changes to your pension. So if you are thinking about kind of doing something different or changing and leaving, it is definitely worth taking some formal advice around that, because it is potentially a very expensive thing to look to do. And yeah, by all means, we have some contacts with pension advisors if you want to kind of get in touch via the usual routes. And as Sharon said, after this, in the next few days, we'll be sending out these slides and an information pack as well to hopefully answer any other questions that people may have. So is there any other questions from anybody else? Oh, let's wait until it loads up. But as Sharon said, if there is any other questions that you have that you suddenly think afterwards, well, I wish I'd asked, by all means, do let us know. We do have a couple more presentations to come through over the next few weeks. So hopefully, I think we're going to have a break over the summer with, I think, most people going away in August. But we'll be back in September, and there are kind of a few other things that we're looking to do. And if anyone has any other topics that would like us to touch on, do let us know. And then kind of finally, my contact details are there as well, should you want to get in touch with myself directly, or again via the channels you've got through Thornfields and First Price Management.
Okay, thank you very much, Phil.